The Fed just cut interest rates by 50 basis points. Why didn't mortgage rates go down last week? I'm gonna give you guys a little insider secret here. Mortgage rates are not dependent on what the Fed does. They just look at what the Fed is doing as an indication of what's going to happen. Think about checking the weather. You look at the weather app, you'll look on Google, you'll do all these things to get an indication as to what the weather is going to be. Now, is it going to be right 100% of the time? No, but it gives you an indication, and so you make a decision based off of that. That's exactly what investors are doing when it comes to the stock market and the bond market, which is actually what impacts mortgage rates. So the Fed announced that they were probably going to do a rate cut a few weeks ago. So investors were already starting to pour money into this industry because they got the idea in the sense that, hey, the economy is going to get better now. And so the rate cut that we all saw last week, investors had already accounted for it the week before. This rate cut that happened didn't really take anyone by surprise. It didn't really change anything. So that's why we didn't see mortgage rates change as a result. Now, we should still see some kind of movement here throughout the election. Depending on who gets elected, there's going to be a couple different meetings with the Fed that happen before the end of the year. So we can still expect there to be some decline before the end of the year. Realize that just because the Fed announces something doesn't mean that investors haven't already taken into account like what's going on and made their moves based off of it.